Every time you build a new car, you build a new road in the financial system. What's happening is the infrastructure is not able to support the incoming requests of high volume, both low to high value transactions in a high trust manner.
If the governments are going to bankroll this, then how do you take the politics out of it? And that becomes nationalistic. And, we're living in a more multipolar world than we ever have.
The problem with that was it limited the innovation potential, the ability to create applications and the ability for users across the world to start interacting with each other via those applications. What excites us is the world where users, both individuals and businesses, have that control over identity, credentials, and assets.
So, ladies and gentlemen, welcome to today's episode of Couchonomics with Arjun. Beaming in from Orlando, all the way in the US, and I obviously need to ask him what he's doing in Orlando, whether it's Disney or something else, is Siddharth Shetty. Siddharth is the CEO of Finternet Labs, and trust me, we're going to repeat that word Finternet quite a lot in the next sort of 40 odd minutes. But with that, let me, welcome Siddharth virtually on the couch. Siddharth, welcome to the show.
Thank you so much, Arjun. It's an honor to be here and excited for the next 45 minutes.
No, Siddharth. Well, honor, I'm not quite sure I can give you that much honor, but I think we're honored to have, you guys from the Finternet Lab on it, because I guess most of us who are, if I say sucker for intellectual, and I don't want to qualify that, have read the paper, which came out of the BIS, and I'm going to ask you to sort of deconstruct it for us rather than I do it. And I'll be honest with you, I needed to read it 3 times, and then I started kind of getting 5% off it, right? So, first questions, what are you doing in Orlando?
So I'm supposed to be in New York in a few days for a set of meetings, and I realized there's a rocket launch taking place in Orlando. So came a few days early. There's a rocket conference and launch here. So just excited to see what folks are exploring in a altogether different space.
Is there some confluence between rockets and financial services?
I mean, technically, yes. If we start becoming multiplanetary, then how do you think about, we definitely can't repeat the same financial services practices there. People can't be doing painful KYC and like data sharing and stuff like that. So I think there's a strong element, but we've got to build a lot more foundational infrastructure first. But it feels very real. I think, if you look at it over the next few decades, the amount of work that's happening in some of this space is very, very real.
Okay, well, let's start with Finternet, right? It's internet with an F, and trust me, we all had a chuckle when we read that. So tell us, as I said, deconstruct for us. What is the Finternet? Why do we need something like that today? And then from there on, I guess I've got a whole lot of questions.
Yeah, so if we look at how we build financial infrastructure, it's sort of like, to give you an analogy, every time you build a new car, you build a new road in the financial system, right? And a lot of us that have been building financial market infrastructure over the last decade essentially have been doing that. So we build very purpose-specific systems. So you want to settle money, here's one rail. You want to settle securities, here's a different rail. You want to do data sharing, you build a whole new data sharing network, so on and so forth. And then even within money, if you want to transact P2P, we have different rails, P2M, different rails. And if governments have to deliver monetary benefits to its citizens, then they have different rails altogether. And so basically what's happened is over the last few decades, we've created highly purpose-specific infrastructure, specific to a use case, specific to a sector, and in some cases, specific to a country/region as well. And this, as we now imagine newer types of transactions, as we imagine new types of interactions between sectors in the same country, like let's say property and financial services, or energy and financial services, or you imagine interactions across countries, what's happening is the infrastructure is not able to support the incoming requests of high volume, both low to high value transactions in a high trust manner. And so, as we were looking at that problem, because we spent time over the last decade and a half, building out population scale systems, it became very evident to us that there had to be a newer way we are building out these rails to unlock a lot of the use cases, a lot of uh, you and participants on your podcast and broader community imagine, right, of what we want to do. And as we went through the journey, there were, I would say, three key principles that captivated our imagination. One was the idea of giving users, both individuals as well as legal persons or organizations, businesses, complete control over their identity, credentials, and any asset. And the asset for us could be across the spectrum. So these could be regulated assets like money or securities. These could be registered assets, anything that has a registrar backing it up, for example, physical property or vehicles. It could be attested assets. And this is, for example, anything that has a third-party rating, attestation, accreditation issued to it, like gold, silver, energy resources, or user-controlled digital assets. And so across these different segments, across these four segments, the real question was, how do you give that control back to the user? Now, what do I mean by control? And this will feel a bit abstract, but we can, through the conversation, start to peel this. But really, if you go back in time and imagine you and I met, we were deciding to hang out in Orlando to start with, and I gave you a dollar bill. Now, that dollar bill, when you looked at it, was a token. And you could look at that token. It was self-contained, self-describing. It told you exactly what value it contained, self-verifying. All the verification marks were embedded in that. And you didn't have to talk to any third person to verify it or transact with it. Once I gave it to you, it's yours. I could give it to you at 6 a.m, which is the time right now, and it's yours. There's nothing that the system isn't working. It only works from 9 to 5, right? So fundamentally, a lot of financial instruments existed in this peer-to-peer physical token form, bonds, share certificates, etc. What happened over the last few decades is when we digitized this. Now imagine the same transaction. If we digitized it, the same dollar that I would have had to give you would now be represented on some ledger. In most cases, individuals couldn't run their own ledger, so then you had like a custodian behind it. That's how you had banks playing a critical role. And now my ledger had to integrate with your ledger. And so now imagine the bilateral complexity that came in, because obviously all the checks, liability discussions, etc. And so that worked to some extent. Card networks and SWIFT and purpose-specific networks built that out. But across different asset classes, across humanity, different jurisdictions, we didn't have infrastructure being built. And so essentially what's happening now with tokenization is a bit of back to the future, where you now have, given the cryptographic developments, and that's what we talk about in the Finternet, a way to imagine a world much like those physical instruments, but obviously with all the benefits that digital has, which is it's programmable, it's real time. I can do all sorts of operations on it because I couldn't tear up the dollar bill and break it into smaller cents. So fundamentally, what excites us is the world where users, both individuals and businesses, have that control over identity, credentials, and assets. The reason that is fundamentally critical is we are after two properties. One is the property of verifiability, which means unlocking provenance of these identity, credentials, and assets. And that's very important. Most transactions today rely on provenance. And many a times, because of a lack of provenance, often policy gets created to manage exceptions. What happens when things go wrong? And the second property that we're after within the Finternet is unlocking transactability, which is the ability to transact, the ability to transfer these assets or rights on top of these assets between individuals or between individuals and organizations. So it could be financial transfers, like we're transferring money or securities to you, but it could be non-financial transfers that I'm transferring a lease to you, and then you can take that lease, get it verified, and get a loan against it. So to summarize, in conclusion, really what the Finternet does is it gives individuals and businesses control of their identity, credentials, and assets. It does it in a manner where it unlocks verifiability and transactability of both of these. And there's a lot of thinking that's gone into how do you do this in a unified manner, because obviously each asset has its own jurisdiction, own public authority in some cases. So how do you think about governance in a manner where each authority has its own autonomy, but it's unified? It comes together for the end user. And then the third and last most important part behind this is how do you build this on highly universal rails? So rather than purpose-specific rails, you have universal rails, much like operating systems that all of us use, like iOS or Android, but you have purpose-specific flows. So depending on the asset that is flowing on top, you can program issuer rules and all the other governance restrictions, but you're not creating rules in the entire stack as we traditionally do today. So that's really a summary of what the Finternet is about.
No, and thanks for that, right? And I guess it begs the question. I'm going to go back to the start of the answer that you gave, right? Which is everything that we believe is wrong with today's, I guess, infrastructure, as you put it, right? Whether it's multi-rail on multi-rail currencies or form factors, whether it is multi-infrastructure based on where you are on the value chain, right? In my humble opinion, that is a function of, if I may use the term, sort of economics and governance, right? How going forward, and I guess let me ask two questions in one so it gives you the space to respond, is one is, right, who's going to foot the bill, right, for this new world to be built? If the governments are going to bankroll this, then how do you take the politics out of it, right? And that becomes nationalistic. And, we're living in a more multipolar world than we ever have, arguably, right? And the second part, second part of the same question, if we go with the private sector who decides to pay for it, then where does the public good guarantee come from? Second part of the question, which is everything around governance. And, your paper talks about roles such as token managers, attesters, unified interledgers, which, to be honest, half of that goes right over my head. But I can still ask the question, which is, who arbitrates disputes across these individuals, right? How does this stop from becoming yet another geopolitical turf war with the added complexity of the, if I may say, of the intellectually few, right? So apologies in the sense, I'm just trying to understand that, yes, I can understand the vision of the architect here and the problems that you're solving, but the underlying world we live in has not changed. If anything, it's become worse. Your thoughts on it?
Yeah, so I think the way we look at that, to your first question, and then I'll come to the second one. On the first one, incentive alignment is extremely important. If you're working on infrastructure that needs to be adopted by society, by populations at scale, fundamentally just the technology is not enough. It has to align with incentives and align with behavioral practices and change some of them where relevant at scale. And that's very key. So that's something we've been doing quite a bit of work on. Now, one is the way we think about this and some of the primitives of how this technology is coming up. You already see a lot of this work in the world of public blockchains as well. Is I don't think it's going to be either or, which is I don't think it's going to be governments adopt it or private sector adopt it. It's a bit like the internet, and I'll add some nuance to that. The reason being, even if you think about the question of governments adopting it, which government, who in the government would adopt it? If you talk about different types of assets, because all of us agree this is a great future to aspire to, different assets are regulated by different agencies. In some cases, property is regulated at a local, often municipal level in most countries across the world, versus certain financial assets are federally or centrally regulated. In some cases, they're even state regulated. And so, who is the government that is going to actually be able to straddle all of this and put it together? And maybe in some ecosystems that does exist. So I think you'll always see a balance between, very market oriented approaches and in some cases slightly more government oriented approaches. And that's really a function of the state and market capacity depending on which jurisdiction we're talking about. But I think this is fundamentally going to mirror a lot of more bottom-up approaches. The reason being, even if you look at the history of the internet and we go back in time, we saw exactly the same arguments and forces play out, right? So pre-public internet, you had different versions of private internet. They had their own hardware stack, their own software stack. They gave you all the, a large company would come in and say, hey, here are the privacy guarantees, here are the security guarantees, use my stack end to end. The problem with that was not that it wasn't safe or secure, but really what happened is it limited the innovation potential, the ability to create applications, and the ability for users across the world to start interacting with each other via those applications. Like imagine a simple email client. You and I have been in touch over email, and that's how we've been connected. If we were in the sort of pre-public internet world, what would have happened is you and I would have to be on the same network with the same application, with everything there to actually communicate with each other, which doesn't work, right? And so what ended up happening is we started to see a world where these new protocols got created, TCP, IP, etc., which abstracted a lot of it. And so people adopted this at the base, but then you started to control the flow, meaning, yes, you can continue to participate on the public internet, much like much of the financial world does today. But they control the flow. They choose who gets access, who do they want to talk to, what are their guarantees, what are their failovers. But what's interesting is all of this is operating on the back of TCP/IP. TCP/IP and the packet structure was designed to fail. Right? So when we think about reliability and some of these questions, the entire world is operating on the internet where the fundamental premise of the internet and the co-architects of it were packets are designed to fail. But you start building layers. Innovation comes in and starts building layers and stronger guarantees on top, and that also unlocks entrepreneurial potential. Companies get built, so on and so forth, as they fill those gaps. So I think when we take a longer term view, which is what we are seeing, this is sort of the future over the next 10 to 15 years, then some of the concerns and gaps when it comes to reliability and things like that will get addressed. Security, privacy, and you're already seeing developments in that space. But really, what we should not forget is universality of the rails, universality of the infrastructure. Because that universality is what's going to allow for all of us to transact when we want, how we want, right? So that's really how I look at it. And I think what that will do is, to your point on the economics of this, is it will create fundamentally new markets. So what we see is consistently when transaction costs significantly drop, unit economics of these market structures change, where you're able to both create new markets or access new markets that were not possible before. We see this with real-time payment systems across the world, right? Look at the real-time payment growth in countries like Thailand, Singapore, Brazil, India. I mean, these systems are doing hundreds of millions of transactions a day, and they've significantly expanded digital payment coverage in each of these countries far more than traditional card coverage, while cards have continued to grow, right? So what they did is they fundamentally expanded the market. When you expanded the market, you could now deliver credit and a whole host of financial services on top. So I think just on your first question, incentive alignment is extremely key. The way the incentive alignment is going to happen is fundamentally new markets are going to be created because of the infrastructure lowering transaction costs. And as these new markets get created, you'll see economic models coming up. That's some of the work we're doing within the lab to see how do each of the players actually get paid out within this ecosystem and what drives those incentives. So I think it's still early days, but that is going to be very foundational. It's not just tech per se that's going to drive adoption at scale. So that's a bit on the economics side of things. Your second question was a bit on dispute resolution, and that's extremely
overall governance.
Overall governance and dispute resolution.
Yeah.
So I think one on the point of dispute resolution. In fact, I often when I present on the Finternet have a slide on this. Is I fundamentally feel Finternet will significantly enhance the process of dispute resolution, which is what happens when things go wrong. Let's talk about different types of assets. You need the ability to do mediation, arbitration, all of these workflows. Every single one of these legal processes relies at the most primitive level on the ability to produce evidence and verifiable evidence. And if you look at the issue today across the world in most financial cases, the court systems are often clogged because of the inability to produce verifiable evidence. So most of your proceedings end up just being adjourned because people are just waiting to get the evidence together from the multiple parties to then start the analysis. And so one of the big parts we believe, again, as infrastructure in this space starts to mature, you will start to be able to create verifiable evidence of all these transactions, then actually programmatically plug in mediation, arbitration, and these kinds of processes. The court system and broader judicial system will continue to play a strong role because I don't think all of this is going to get resolved by a set of smart contracts right at the get-go. That will just create unnecessary complexity. But you can significantly enhance. I mean, many countries, the dispute resolution is just very, very painful. That can be significantly enhanced. Now, there'll always be exceptions of certain types of assets, certain complex assets, and I always see these as a continuum. But I think when we start to imagine the properties of observability, end-to-end auditability, today in the financial system, you do random sampling in most cases. As you imagine infrastructure like this coming in, which is doing billions of transactions a day, you can't do random sampling. How are you going to randomly sample? You need 100% auditability. So my view is as some of these primitives start to fall in place, they'll significantly enhance even the process of dispute resolution. You can have specialized, which we see developments now happening across the world, specialized online dispute resolution providers. So ODR is really opening up as a big legal field globally, where people can plug in and manage the end-to-end workflow of evidence gathering, mediation, arbitration, conciliation, all the legal processes, and they're legally valid. Those decisions are legally valid. So you could plug in specialized online dispute resolution providers, but I still feel that we're still at the early stage. So over the next few years, we'll see a lot of these kinds of additional layers being built within across the world.
So Siddharth, I do want to move on, but I guess I'm going to make my last point, and you can react to this. So call me old and cynical, which I think I'm both, right? If I may use the complexity or the richness, let's use the word, the richness of the problem that you're solving, right? It's multi-layer. As you said very correctly, this is not just about technology, it's about a lot more, right? It's about governance, it's about harmonizing regulation, it's about solving, the underlying issue in terms of how money flows, it's about plugging into the existing environment. I use a very simple example. We've been doing cross-border payments forever, right? We can't solve simple cross-border regulatory harmonization issues to solve the problem for arguably the people who most need it, right? Yeah. And for whatever reason, I just don't want to get into it. I can start seeing these mini walled Finternets coming around, right, which are contained within a country, because you could argue that whether it's a top-down approach or, in a lot of ways, UPI is a great example, and I know you were part of that, the team which architected, which was the government comes with a concept, it gives everybody the rails, everybody comes onto it, And then they're now layering all kinds of stuff. And now India's talking about ULI and so on and so forth. I struggle to see, and again, as you say very correctly, it's early days, but I don't know if you're talking a 20-year, 30-year horizon, right? I can't see how large chunks of the world come together on this sort of new way of operating, which is powered by even the concept of the Finternet, right? I'm not suggesting everybody has to adopt that. I don't know if you even want to react to it, because I think my follow-on question might actually help us go a bit deeper. So why don't I throw out the question, and then you can choose to answer this bit also, right? So what are we seeing today, right? We're seeing the future of money in a number of ways, right? We have bank issued stable coins, right, which, as you said very correctly, are sometimes on their private networks, right, or private blockchain as they call it, right, which is the early days of the internet, as you referred to, right? You have fintech issued pegged stable coins, whether it's USDC, USDT. We've just seen a blockbuster IPO for Circle, which I think was more around the fact that they're making 5% on their treasury bill rather than anything else, right? We have all this conversation around the CBDCs. I know it's kind of simmered down a little bit on the wholesale side, but India released some very, very impressive numbers in terms of how the adoption in India for the retail CBDC, which I thought was superfluous to purpose, right? And in addition to that, you have, as you said correctly, all these other rails, which are real-time payments, the big tech rails, and so on and so forth. So my question to you is, where does Finternet fit into all of this? Is Finternet the underlying infrastructure which sort of semi-powers it? Because I guess there's infrastructure which these guys are also building, largely siloed. Or does Finternet then run the risk of becoming yet another silo among so many other silos, which then compounds the problem because the majority of the existing financial services infrastructure is incredibly legacy. It's struggling to even integrate into, if I may call, the mildly innovative pushes that we're making. So how does this all sort of come together in your view?
Yeah. So there's a lot to unpack there.
Yeah, well, you can see how my brains are hurting, right?
I can really feel that, and that's exciting. I think one is I'll just say what comes to my mind in whichever order is we deeply believe that for the foreseeable future we need to think about these ecosystems when you're imagining, say, Web 2, as people traditionally call it, or Web 3. We have to imagine these ecosystems coexisting. As we imagine adoption being accelerated, it's very difficult to say, hey, let's wait for the next 10 years. Everyone will be tokenized. Every identity credential asset will be tokenized. And then, let's transact. And so a big part of what we wrote out in the Finternet paper is how do you think about the construct of coexistence with existing financial market infrastructure that's out there, which gives you a quick +1. It's much faster to adopt, but you design it in a way where you're not held back by the constraints of it, which many times are typically technical and operational constraints that are out there. So how do you create the right bridges between these multiple existing networks so that you can sort of onboard onto the Finternet or Finternet-like versions across the world. So one is we do need to think about coexistence. That's extremely key when you look at adoption. And back to your point of, you mentioned UPI, or you look at fast payment systems, they achieved across the world, PIX in Brazil and others, achieved ubiquity of digital payments in a real-time manner on top of existing infrastructure. So there's a way to layer and deal with that, but definitely that hits scale issues beyond a point. And we've seen that intimately. UPI is doing 600 million transactions a day. A question I would often ask is, okay, that means a large number of users' transactions are generated via UPI. Why is there no way for me to then subsequently share that data? I had to go on to architect this whole new system for open finance, which technically you should have had a lot of reusability between these different rails. Or you look at that in Europe between the payment efforts and the data sharing efforts. UK recently came up with a smart data regulation. How do we reuse and bridge with existing infrastructure that's out there to allow for faster adoption is important. So that's one. Second is, to your point on silos and fragmentation. Now, part of this again goes back to our early discussion on incentive alignment. Really, when we think about the question of interoperability, most people think about this as primarily being a technical challenge. But in my view, actually, interoperability is almost never a technical challenge, except in a few cases where it is, where you need well designed, abstracted out protocols. But in almost most cases, you can solve interoperability by throwing a bunch of engineers like us into a room and saying, "Hey, here's some free food and drinks," and you just code this out, right? And it can be done in a day or 2 days. You'll be able to build an interoperable implementation with AI agents even faster. But the question that often comes up is, do people want to be interoperable? Do they have the incentives to be interoperable? And then how do you create the right kinds of contracting structures and operational structures to maintain that interoperability, right? And so when I think about the interoperability question, it's often those additional layers, not just the tech, which is critical. And so when we look at it like that, especially in the world that we're going, I would reframe the question of interoperability as well as not so much of you're part of a system and that makes you work with everyone, because obviously in today's world that doesn't work, right? But I should have the ability to choose who I work with, who I transact with. But when I do choose to work with them, I am live right away. I can, like, at a flip of a switch, go live. Versus today, if I choose to work with someone, I have to spend 1 year with contracting, tendering, procuring technology to then lay the rails to talk to you and integrate with you, right? And so I think the future we'll move towards is really to manage the sort of fragmentations that are out there. Is each participant, each node on these networks should have the ability to decide who they want to work with. But when they do decide that, the marginal cost of working with them is near zero, because you're just choosing, the rest of the rules. At a technical level, it's already live. You're part of the same grid. And that's really the future we're going towards. Much like, think of it today, and I'll touch on your cross-border piece, right? The banking regulators are not sitting and regulating Apple or Google, which runs Android, right? What they do is fundamentally, if I create applications that get involved in certain flows, whether it's digital lending flows or currency issuance flows, then they'll start getting involved in the application and the operators behind that. But they're not actually going and regulating the rest of the stack on which this is being operated or distributed. And that's because there's a certain amount of maturity and reliability in the technology, and partial path dependence also played a critical role, right? And that's an extremely important factor. So when you think about the world of cross-border, really what it comes down to is, yes, there are existing solutions. For example, you have the card networks, which have solved cross-border really well, but obviously in a P2M manner, they didn't expose that infrastructure in a programmable way, which then would allow for a whole range of other transactions. You have correspondent banks which have solved it, but we're globally seeing the de-risking issue that's coming up because the cost to serve many of the jurisdictions. And this is the big challenge. We have 100 countries that have a population less than 10 million, and they don't have the unit economics to build infrastructure from scratch, use case by use case. As a result of which, what's going to happen is they're getting shut out from the formal financial system, and many of them are going back to poverty, and that's what the data is showing when you look at the de-risking data. So you have card networks, you have correspondent banking, you now have stablecoins and public blockchains coming in. And I think that area, particularly stablecoins and public blockchains, is extremely important because it now gives us a time where you have a universal playground. So there's universality of infrastructure. If you can strengthen the compliance, strengthen the trust, which I believe is possible, you have the ability to deploy compliance tech, reg tech, soup tech applications on top of infrastructure like this, then you can actually start to solve the cross-border problem in ways that, if you're purely trying to solve it using correspondent banks, it's really difficult. And if you look at the inclusion efforts in most countries across the world, it wasn't really banks going to people, it was banking that went to people. Banking went to people either via banks in some cases, like in India where 500 million bank accounts were created, or it went to people via telecom companies and other wallets, depending on the jurisdiction, right? So I think it's not so much about taking existing infrastructure, whether it's correspondent banks and others, to people, because the risk reward ratios and liability structures don't work in their favor. But as we have a new playground emerging, it allows us to imagine the possibilities of these flows being architected in a high trust manner without a lot of the legacy. And I'll give you just one example of like regulatory legacy, which I've been thinking about of late, is look at the card networks, right? They do cross-border transactions phenomenally well. Now imagine you're swiping, let's say I'm here in Orlando, I swipe my card. That merchant has a guarantee of receiving their money no matter what. And card networks are present in 190 plus countries across the world. Now, the acquiring bank of that merchant is not receiving, the KYC details from my issuing bank all across the world. It's a good question to ask why. Because if you look at the correspondent banking model, your KYC gets shared across multiple hops, and that creates, all the dependence that we have, and all the compliance and cost structures and so on, a significant part of it. But in a card network, that's not happening. And that's because if you think about when the FATF rules got put together, and you look at the history of card networks, how they emerged, there was a certain path dependence and structure to how they already created the network. So I think, especially as we look at the developments in stablecoins, public blockchains, and future tokenized assets, we definitely need a world where trust gets architected a lot more explicitly and embedded into these flows. And given that it's a bit of a Wild West right now, it allows you to move in early and create that, which otherwise, you'll end up having to deal with a lot of legacy.
Okay, and so that begs the question. So I was going to ask you something else, which we were speaking earlier about, but I will talk about that question later. You talked about trust being programmed or codified into the underlying, if I may use the word, token here. So at the end of the day, are we really having to start with solving, I guess the word is not exportability, but let's use that for the lack of me coming up with the word, of digital identity? Is it all coming down to the fact that if we can have a single version of the truth of the identity, whether that is an individual or a corporate, all of this stuff starts to become a lot easier?
Yeah, so I think there's a very important point that you're making up when you talk about identity, because and a conversation I was having recently was between this verifiability of identity and transactability. And the discussion we were having is most of the debate gets focused on transactability because obviously that's cooler and newer tech is coming in and all of that stuff. But if you solve for verifiability extremely well, and you have strong digital identity, so there's accountability, meaning when something goes wrong, there's accountability, you have a way, you have traceability back to that end individual or organization, then it dramatically simplifies the thought process of policymakers when they frame a lot of these regulations, because the risks you're dealing with or the risk perception significantly changes, right? So I do feel that identity is a very foundational component of these ecosystems. There's some nuance to how we think about identity. So one part of identity is who you are, and that can be through biometric attestations and other properties about who you are. But it doesn't stop there. People already have existing identities, or what I would like to call credentials about them. This could also be what are they doing, what ecosystems are they a part of, like your government certificates, driver's license, mark sheets, etc. And these also play a very critical role in financial transactions to establish trust. And so we need to imagine a world both from a Finternet context, but also if you think about the AI world that's coming in, deepfakes, etc., where you have the ability to issue credentialized documents, credentialized identities back to the individual or back to the organization. And that becomes an extremely important starting point. So I think one, identity is very key, but we need to think about identity in the broader spectrum, not just who I am, but what I do and credentialize a lot of those documents, because that becomes sort of the root of trust for you to then participate in these ecosystems. And if you have that done well, and work also needs to happen on legal recognition of these credentials. So, in many jurisdictions today, what happens is you can have a digitally signed document, which by maths cannot be tampered with. But many financial institutions do not accept that. They'll still say, please give me the paper document, because in their mind, they're still following the certain letter of certain laws and regulations, and they'd rather follow that rather than risk adopting some of this and then getting stuck in audits. Now, it might sound absurd, but that is the reality in many jurisdictions. So there needs to be work on the legal aspects of some of this as well, so that there's legal recognition of credentials, which drives up acceptance of it and usage of it in a whole range of flows that are laid out. So I think that's really how I look at the identity question, Arjun.
Do you believe that and as a question I ask is, do you believe that this, and again, I'm not going to use the word centralization, but let's just, for the sake of argument, creating this sort of centralization of credentials or identity, and especially in the world where I guess fraud, scams, and courtesy AI, I usually say that, we had $1 trillion of scam last year and the AI agents have yet not checked in.
Yeah.
Right. Because I've always believed that, Aadhaar in India has kind of underpinned a lot of the revolution that we have seen on UPI and so on and so forth. But do we run the risk of creating a single point of failure?
Yeah. So I think we need to look at the question of centralization and decentralization in light of what are the core objectives and what are the risks, and how do you very systematically mitigate those risks, right? So in the case of Aadhaar, the objective was to establish uniqueness of identity, because it was very critical in government programs to ensure that the same person wasn't claiming their benefits twice. And this is an objective that you're seeing now discussed in many countries, including the UK and the US and so on and so forth, right? So because of that property, where there was a need to ensure that an individual doesn't claim it twice, you need to think about a centralized approach, because you need a way to actually do deduplication at scale. If there was no such requirement of the same person not being able to claim it twice, then you could actually allow for multiple IDs to be created. So I think really this needs to be framed in light of what is the broader objective of any program and effort. And typically a lot of these, for example, even if you look at Aadhaar, one part is the deduplication, but actual usage is completely decentralized. So what happens is the Aadhaar system is giving you a digitally signed credential back. You are free to use that credential anywhere in the world that you want. And there's no ping back via an API to the central system. You can do a local authentication, or what's called federated authentication, between two nodes, and authenticate yourself completely decentralized, federated, without any trace back to the central server for authentication, right? So if you think about it, that's a decentralized approach that was added on that really strengthens privacy, that strengthens the use cases, because I can take now that same Aadhaar credential, get it validated by some entity in the US, and that's done completely bilaterally between the two of us that might be transacting. And so there's technologies that are coming up that really allow us to imagine this question with even more nuance. But it really starts from what is the objective, right? And so we see that even in the crypto world, you see while there's decentralization in theory, in many cases, you have centralization at the level of miners, you have centralization at the level of layer 2s, things like that. And so when that happens, you need to start thinking about, okay, part of it is also normal network effects that kick in. Market structures, that's how market economies work over a longer period of time. And so then you really need to think through what are the risk mitigation mechanisms. Either you mitigate the risk using technology, you mitigate the risk using contractual or legal structures, and that's extremely important. So for example, in the Aadhaar project, you had the Unique ID Authority of India actually having a strong legal framework around it, around what they could and couldn't do with the data, etc. And this has been debated at length. So really, it comes down to what are your objectives, how do you systematically mitigate risk to achieve those objectives, and then look at centralization or decentralization in that context. Otherwise, it can become extremely ideological as a debate, and that just ignores the practical realities of the life all of us live in today.
All right. I've got a question for you. We had a slight discussion before we came into it, a yes and no question. Is Finternet digital public infrastructure? Yes or no?
Yeah, so Finternet isn't digital public infrastructure on its own. It uses digital public infrastructure that are out there in countries. It uses digital public infrastructure that other economies are building, communities are building. But fundamentally, what Finternet does is even reimagine how we would think about digital public infrastructure, because if you think of the DPI space, it's really still purpose-specific work that is happening. So what do we tag it? Maybe it's a new form of digital public infrastructure. Maybe it's a whole new, sector that we create on top of this. We're still figuring things out. That's why we've set up the lab network. So we have a lab in the US, one in India, one in Singapore and Switzerland, and really giving ourselves a space over the next year to 2 years to really think through how do we operationalize different parts of this? What does it look like? How do we build regulatory capacity, but also build the underlying technical rails? But what I do know is also it will create new operating models, because if you're expecting, and my main interest is how do we build networks where anything of value can be exchanged, like sort of a long-time curiosity of mine. And really we need to think through what those network structures look like. That is definitely going to be very different than traditional operating models of DPI that have been out there, primarily because most DPIs are still country and sector specific. They've not traversed the globe as a, let's say, homogeneous network along the lines of some of the networks that have been built, like Visa, MasterCard, etc. So I feel like we're in a new space. We're not sort of, I would say, overthinking what that looks like beyond a point. Now it's just on us to figure it out and build and see what the next avatar of some of this looks like.
So I'm gonna, I know we're running out of time. Just a couple of quick questions. Firstly, so talk to me a little bit about the Finternet Lab. So what's the kind of the legal ownership structure of Finternet Lab? Is it not for profit? Is it funded through private and public sector? How is it all organized?
Yeah, so it's currently it's set up as a nonprofit structure. So this was co-founded along with some of the colleagues that wrote out the Finternet paper. So Pramod Verma, Nandan Nilikani, who's been the co-author of it, along with Augustine Carstens, and Sujit Nair, who's been driving an effort called Backend. So a bunch of us, we've been thinking about decentralized networks, open networks for a long while, and so that's how we came together to set this up. Now, the labs are really focusing on 3 tracks. So one is the regulatory capacity building piece, because like I touched upon, a lot of these questions, dispute resolution, legal recognition of these assets, how do you classify them, how do you deal with them, is an important piece. And that's where we're working with universities across the world to build out initiatives that will train regulators at a global level on some of this. And that's very key to accelerate adoption of technology across the board. The second track is really focused on the underlying technology. And then the third is what we internally call calibrated takeoffs, in the sense these are not pilots, but these actually go live to users. So it's a bit like the plane, but we're still flying the plane at 100 feet, not yet at 1,000 and 10,000 and 100,000 feet. But for the plane to fly, you really need to think through a lot of the aspects of this end-to-end in production, right? And so we're identifying and handpicking a set of partners, both across financial but also non-financial use cases, and experimenting that within the lab environment. And that's where we're thinking about, okay, what would networks like this look like in the future? We will build some of these networks ourselves. So we'll actually operate infrastructure within the lab. It's not merely advisory. We're actually going to build out. We'll see operating companies being spun out from the lab as well. And so I think there's going to be, really we've to take this as one step at a time, and see what comes out of it. But our main goal is to get this realized on the ground into people's hands. But at this stage, there's still a lot more learning that we need to do, and the lab environment is to serve that purpose.
So what do you expect is going to be the first thing which will come out of the labs and sort of hit the ground running? Is there something which is closer to it?
Yeah, so we're doing a Finternet summit in early next year in New York, where we'll actually be showcasing a lot of this. So you'll actually see real life examples of this in action, and that should basically give a flavor of what should come out.
And my last question before I say goodbye, because I couldn't believe you're up at 6 a.m. in the morning to do this.
You can see the sunlights come in now, so you can.
I had no clue. I thought you were going to be calling in from either Singapore or from Delhi, from India or somewhere or the other, but I didn't expect you to be in Orlando. If I just take the place where I'm sitting right now, which is the Middle East, right? Two-part questions. What traction are you getting? What can we all who are part of the ecosystem out here do to sort of make this more a part of the dialogue and the conversations that are going on here, actually among the right kind of people, if I may use that term?
Yeah. So I feel one is the Middle East definitely has a strong opportunity. They've been trying out different efforts in tokenization and have been, in a few cases, also doing pioneering work on digital assets and regulatory frameworks around that. So really the Middle East is a chance to leapfrog because there's also less legacy infrastructure to deal with. And so that allows you to redefine what the capital markets of the future looks like, what payments in over the next 10, 20 years looks like. You can create a whole new space where property can be executed completely digitally. Now imagine you integrate this from an AI agent perspective, and today most AI agents solve the discoverability of the flow very well. Discover offers, bring all of that together, present it to me. But you have to execute these flows. What often happens is then it fragments from there, because then I have to go to a physical branch. Let's say an AI agent's advising me to create a new inheritance structure, which includes, let's say, a will that I need to write. Now, for me to actually execute that, good luck. It'll frame it for me, but then I actually have to go to some physical branch and multiple branches and get that stamped and signed and some witness and so on and so forth. Or you have to do it digitally across different portals. And so when we start to look at tokenization infrastructure like the Finternet, it allows you to imagine that flow end to end, where you can leverage AI agents but drive end execution of a whole range of these transactions. And I think that's fundamentally extremely important. So if you think about it from that lens, the real question to ask is, what are the leapfrogs that are available that the Middle East can come up with? What are the model regulatory frameworks in a whole range of these areas that the Middle East can come up with that can actually bring that to life? And how can you solve that both domestically, but also act as reference templates for the rest of the world, or solve for it regionally? And if that's an area of interest, Arjun, we'd love to have you as part of. There is a small Finternet chapter in the Middle East as well, and we'd love to have you.
I'm part of it.
As part of that, and really help amplify this and start to see early calibrated takeoffs come up even within the Middle East.
No, we'll do that. I've been in touch with a few of the people who are part of the chapter. They were kind enough to add me to it about a month or two ago. But whenever you're down next in this part of the world, do give us a shout out. I'll try and make my way to New York if I can early next year.
Awesome.
It's a home for, well, my other half is from New York, so it'll give us an excuse to be there for some reason or the other. But with that, Siddharth, get some rest. Best of luck watching the rocket shooting up. I don't know if it's today or tomorrow. And then, very, very interesting what you're doing. I'm sure we'll hear more and more about it and off it. And I'm assuming you'll be at the Singapore FinTech Festival. I'm assuming you might be there this year, right? Because I think that's kind of where we met you, or I met you briefly last year. It's nearly been 7-8 months. So with that, thank you, sir, and have a good day.
Thank you so much, Arjun. Have a great rest of your day and week as well. Thank you.
All right, excellent. So, ladies and gentlemen, that was Siddharth Shetty, who is the CEO of Finternet Lab. There's a lot of interesting white papers out there, or at least a couple of very interesting white papers, which I will post along with the episode when it does come. I took a stab at my attempt at sort of deconstructing, a very poor attempt. I will share that too. But with that, I'll say goodbye, and we'll see you next week. Bye-bye.